Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com. This is Friday, the 28th of July. Hope everybody has had a great trading week. A couple things. Again, give me a thumbs up, put some commentary in the commentary section there, sign up for the channel, hit the like buttons and all that for the YouTube so I can keep growing this thing. A couple announcements. I'm having a class, free class. This is a free class Wednesday, and I'm going to go through pretty much why smaller time frame levels generally are a recipe for losing money, as some of you have already encountered. Check that out. I'm gonna go. It's gonna be about an hour and a half long class. I'm gonna go through a process that I go through to maximize quality levels, i.e., enhance your probabilities in regards to futures trading. Okay, so if you are interested in that, go ahead and sign up. Let's go ahead and cover the markets going into the charts. I'm going to go ahead and share my charts with everybody. Let me start off with the S&P. As we know, the S&P, we had all kind of movement this week. We did actually, you saw this big drop that came in. We saw this big drop that came in yesterday as a result of, it was a couple of kind of a chain events. Bank of Japan announcing they were going to lift their policy rates. That in turn sold off the bond market. We had a big spike in interest rates, 10-year jumping over 4%. And obviously that spooked the market. So that was what caused that situation there after the Fed announced another quarter-point rate hike and the ECB and so forth. So lots of stuff going on. But here's the bottom line. We basically just pointed this out to my members. We're sitting basically right where we were 2 weeks ago. So after all of these gyrations, obviously, if you caught some moves here, the S&P is sitting, in fact, below the 409 low from the 409 high from 2 weeks ago. So it looked like we were going to be off to the races. Then we came back down, hit one of these levels that, if you've been watching the videos, I actually pointed this level out to everybody in the last video we did on Tuesday, or actually it wasn't posted till later. But so here we are now, basically just chopping around, kind of summer doldrums, back and forth. Again, kind of range trading on the bigger charts. Next level is all the way out here, and we basically just clipped that high on the SPY. It actually hit and then pulled back. So generally speaking, we're kind of consolidating here. I would say on the S&P. Next week, we've got Apple, Amazon, and a whole host of earnings still on the docket. So we'll see if that changes anything, or we get another interest rate scare. But all in all, with the Fed, ECB, and all of that, we're just kind of churning and burning right here in the S&P at the end of the day. Sentiment is getting very, very stretched, very bullish again, but this move here is still intact. No question, the buyers are still in charge until we break some significant levels. You got to give the basically the benefit of the doubt to the buyers as of right now. Once we start getting into the August, September seasonals, could change a little bit there. Okay, NASDAQ. We, in fact, I tweeted about this. We, in fact, did short the NASDAQ yesterday, right along here. And we got out right there. So we actually, that was a pretty good timing. And quite honestly, we caught about 300 points, and our target was down here. we got out right there, and then obviously the thing rallied back up again. But similarly, we have not even, I don't know if you guys have seen this, but we haven't even taken out this high, whereas the S&P took out that prior high. NASDAQ, I would call this the lagging, right? So NASDAQ, in fact, is still kind of lagging right here because we haven't taken out that high yet. So that's something to consider. We just basically came up to the down to this support, you know, these pivots, 15,500 rallied out of there. Are we going to break out? You know, again, still obviously want to give the benefit of the doubt, but again, even earnings were just a mixed bag. You know, again, Meta blew out, Google came up, Microsoft down. Just, you know, there were so many companies, and it's, you know, again, just kind of a mixed bag in terms of the mega cap. So, you know, let's see if this actually breaks out next week with Apple and Amazon. Maybe this is what takes us out of here. We actually, on the big charts, we just got basically all the way on the daily chart. We don't have anything until we get up to the new highs up here. So there's a chance at some point, maybe we go out and make a new high on the NASDAQ. But right now it's actually lagging because there's a lot of rotation going on, you know, from some of these tech stocks to, you know, banks and other type of areas. Okay. Dow also, you know, sitting almost at a level right here. Russell just chop, nothing going on there. Got big resistance at 2017. We haven't been able to get through that. So generally, the Russell was nothing to talk about. Even bonds, really, aside from that big, that kind of sell-off we did yesterday, where rates jumped here. This is these are the interest rates right here. Really didn't move after yesterday. So another little scare. We have had these kind of scares before, where you have a jump in interest rate. We had that basically here as well back in the early part of July, and the market sold off a little bit, but then, you know, kind of just settled in here and not really doing a whole lot. So nothing really. Is there a chance? I mean, if we do get another bump in interest rates and take out this 408 in the interest rate in the 10-year, I think that would also be another headwind for stocks. So we'll see next week if what would cause that. We do have, you know, we just have a bunch of earnings. Not, you know, we still have the usual data. We got some central banks and so forth. But generally speaking, the bond market is not really doing a whole lot. Just, you know, back and forth. Got big resistance on some of these bonds. So we'll see what happens there. Similarly, the dollar continues to kind of grind higher. We've been talking about this. You know, again, it jumped yesterday with the Bank of Japan announcement and yields, and the Fed really didn't impact. In fact, after the Fed, the dollar looked like it was going down. So it looks like it's headed back up to 103 in my estimation. And again, part of what I'm going to talk about in our class is why all these blow out, all these levels along here. If you've been trying to, you know, try to trade any of these middle part of the move. So I'll be spending a lot of time with everybody to kind of get you guys back on track here with this if you're still having some issues there. Even these levels here on the euro blew out. Both of these levels there, you can see that kind of got a little bit of a bounce. If you're playing for 1 or 2x trades, I guess you're okay, but you're not gonna, you know, you're not gonna make any headway long term if you keep just trading for 1 or 2x type trades. Similarly, so the currency is all just chop. Even the yen. It's interesting because the yen, you know, after yesterday, last night's decision, had kind of some whipsaw action. Still possibly looking at some lower levels on the yen. We'll see, but generally you can see just a lot of chop on all the currencies. Really, just really not even any waste of time to really look at these right here. So, what you have in the futures market right now is a lot of chop. You can see just every market that we look at is just basically range trading. You can see just across the board because of the back and forth gyrations. The stock market clearly is going up, grinding for a week or two, and then maybe taking another leg up. But as a short-term trader, what do you do in the meantime, right? You got to take advantage of some of the moves in the short term and be very super nimble, or else, or if you have the staying power to get long and stay long. Even, you had an 80-point pullback in the S&P yesterday. So I don't know how many folks are actually able to sit through an uptrend with an 80-point pullback in the S&P, or just again trying to grind out some trades out of that. So you can see on silver, still looking at some levels here. We kind of caught up to that level and then pulled back. Gold's been dead in the water here. This is actually a rollover gap. Came up to here. The chart gets distorted because of the price differential between the expiring month and the new month, which happens to be December now on gold. Everything else really, oil is again edging higher. We talk about this again in a very kind of grinding, meandering kind of manner. You can see just kind of channeling. Clearly it's been moving higher, but it's been again very not in a straight line clearly, and even here just back and forth, kind of a I would call it kind of a creeping higher type of momentum or lack thereof. And then we have obviously the big resistance level up here at 83. That's really going to be the big level. We probably grind up to here, and this will be the fourth, fifth attempt. We'll see if in fact this go around we actually break out and head back into the mid 90s, which would be very inflationary, by the way. So that's going to be worth paying attention. If that I think that's another headwind. Everybody seems to think that inflation's kind of under control, but if oil gets back into the 90s, that's gonna that's obviously that's going to raise some eyebrows. So we'll see how that goes. Nat gas just kind of dead in the water, and then the grain market's also inflationary. Notice what's been happening with the soybeans. Here, a long-term chart of the soybeans, wheat. All of these grain markets have also had a pretty nice move up higher as well, especially wheat, as you know, with the Russia thing. So all in all, I mean, that's really what we got this week. There were some opportunities. Again, we did catch a nice trade in the NASDAQ. Stocks, again, just a mixed bag. Looking at some of the stocks that we've been looking at, looking at Google, some of the mega caps, that's still a long ways from actually coming out here. But if you take a look at Meta, which was one of the big ones this week, all it did really was come up on the earnings, came up to that big gap from last year where it just tanked all the way down to 80, came up there, pulled back yesterday, and it may want to take that out next week. That's what's been driving these back and forth movement here on these mega caps. Microsoft was actually on the mat all week as well. You can see that thing peaked at 366 and traded all the way back down to 330 and still not even close. So this was actually, again, that's what I'm talking about, a mixed bag. So next week, we've got, Apple is going to be the big one, the biggest of all in terms of bellwethers and so forth, moving the indexes. And so that's kind of where we're at. Again, very mixed picture on the earnings. Banks, just looking at some of the banks that we've been looking at. JPM just kind of stuck in the mud here. We've had some of these second tier stocks like Roku had just a blowout. They lost money, but it's kind of a short squeeze going on. So that was a big mover this week. We are in a TMUS options play right now. It's kind of been dead in the water here. It kind of moved all over the place, but we've got ample time on this. So we are in this right now. You can see it's kind of just, we're expecting some kind of a breakout out of this range here in T-Mobile. That's, by the way, an all-time high. We're actually, I think we're maybe going to get an all-time high at some point here. That's an all-time high, by the way, right up here in T-Mobile, not that far away, 151. These all-time highs do act like almost a gravitational pull. So 154 is an all-time high. This just recently made an all-time high and then pulled back. And so obviously there's big resistance at 151 on this. So just some of the stocks we're looking at right now. But other than that, yeah, that's just churning and burning right now. Still obviously somewhat bullish. When that's going to end, who knows? But last couple of weeks has just been kind of maybe it's just, again, another pause and then another leg up. At some point we are going to obviously get a pullback. It's just been lots of chop, so there's still opportunity there as well. So okay, all right, everybody, have a great weekend. If you want to sign up for the class, there's some links below. If you want to contact me, there's also a link below. And so if you want to spend an hour and this is a free class coming up on Wednesday, so go ahead and sign up for that, and I will go through some processes I use to pick some levels and so forth. Okay, all right, everybody, have a great weekend, and I'll talk to you next Tuesday. Take care.